Good morning, everyone. Good morning. Thank you for attending. Am I audible to everyone? We'll sharply start. We'll just give one more minute to start. I think people are joining. Okay, guys, it's time. Let's start. Good morning, everyone. Very good morning. Thank you for joining this special session on decoding NRI taxation in India. Actually, this year is a very special year for us as we celebrate our 5th anniversary of Coral Metrics and 15th anniversary of Swat and Associates. We now call ourselves Coral Metrics 2.0, representing our evolution into different services in the startup arena, international accounting, wealth management, and expense management. At Coral Metrics, we just don't consult, we become partners in your entrepreneurial journey. I'm sure many of you are familiar with our CS Data, seasoned CA with over 15 years of experience. She brings a wealth of expertise in taxation, both direct and indirect taxes, namely income tax, GST, and NRI services. Her commitment lies in elevating business by offering strategic financial solutions that exceed expectations. Joining us today, Mr. C.A. Chaitanya, today's presenter, young and energetic CA, specializing in taxation, GST, and IT. Actually, it was his idea and enthusiasm that led us to organize today's webinar on this special session. His passion for knowledge sharing and innovation and to continuous growth journey. At last 15 minutes, we'll invite you to participate in your Q&A session. Actually, your questions or insights are valuable to us, and we're looking forward to chat with you. Without further adding, I will hand it over to Mr. Chaitanya to get into today's topic. Here goes. Thank you, guys.
Hello, good morning. This is C.A. Chaitanya Kumar. Thank you, Avkash, for introduction. As you all know, today we are going to discuss about NRI taxation in India. We are going to cover only few topics in this session. So, who is NRI? How to define his residential status? What and all income will be taxed to the NRI? What and all exemptions can NRI claim? What and all deductions can NRI claim? So what is the double taxation avoidance agreement? What is the form 15CB and 15CA? Let us start with the how to define residential status of NRI. Let me share screen once. So an individual can be classified into two types, resident and not ordinary resident and non-resident. And a resident individual can be classified into two types again, a resident and ordinary resident, but not ordinary resident. In Finance Act 2021, the deemed resident concept, in Finance Act 2021, deemed resident concept they introduced. So I will tell you what is the resident, how to define the residential status. So first of all, we need to check the residential status every year. For non-resident, we need to satisfy, as per Income Tax Act 1961, we need to satisfy the basic condition to get the residential status. If you not satisfy if you not satisfy any basic condition,
The same screen sharing.
Individual can be classified into two types. Individual can be classified into two types: resident and not non-resident. Again, resident individual can be classified into two types: resident, ordinary resident, but not ordinary resident. In Finance Act 2021, they introduced a new concept deemed resident. So I will tell you how to define the residential status of non-resident. As per Income Tax Act, we need to satisfy basic condition. If you not satisfy any one of the basic condition, then we can call him as a non-resident. Resident. So what are the basic condition? He has to stay in India. He must stay in India at least 182 days or more during the previous year. Or second condition, he must stay in India 60 days or more and 365 days or more during the four preceding to the previous year. In these two conditions, he has to satisfy either one. If he does not satisfy both the condition, then we can call him as a non-resident. If he satisfy any one condition, then he is a resident. And again, resident can be classified into two types: resident but ordinary resident, resident but not ordinary resident. For this, we need to check the additional conditions, which is defined under section 6 subsection 6. What are those additional conditions? So he has been in India, he has been a resident at least 2 years out of 10 previous years preceding to the previous year. He has to satisfy at least 2 years of a resident, and he has to stay in India at least 730 days or more during 7 previous year immediately preceding to the previous year. If he satisfy both the additional conditions, then we can call him as a resident and ordinary resident. If he does not satisfy any additional conditions, then we can call him as a resident but not ordinary resident. Based on this residential, based on their residential status, taxation will be applicable as per Income Tax Act 1961. In Finance Act 2031, it says they introduced a new concept of deemed residential status. What is that? An individual Indian citizen or a person of Indian origin who comes to India for visit and having a Indian income, it may be accrue or risen in India, it is exceeding 15 lakhs per year, then he will be called as a resident but not ordinary resident, provided he has to satisfy the two conditions. What are those conditions? He is in India at least 120 days or more during the previous year, plus 365 days or more during the four preceding to the previous year. He has to satisfy this condition, and that income should not be taxed. He should not pay any tax outside of the country. If he satisfy both the conditions, then he is eligible. Then he will be fall under the deemed residential status. Based on that, the taxation will be applicable. Now, the next, when it comes to the scope of the total income, so there are the two types of Indian income. There are two types of income in India: Indian income and foreign income. So, what is the Indian income? What is the foreign income? So, based on this only, the Income Tax Act will levy the taxation. Income earned or to be earned in India, irrespective of whether you receive in India or outside India. So income is taxable on earned basis. Income is earned or to be earned in India, received anywhere in India. This one we can call it as an Indian income. The income received or to be received in India, earned anywhere in India. These two items we can call it as an Indian income. Income earned and received outside India, both earned and received outside India, but business or profession, or it's a controlling from in India, then this income will be called as a foreign income. Income earned and received and controlling also outside India, This is called as a foreign income. So in Indian income, so for resident and ordinary resident, entire Indian income will be taxable, entire Indian income. So whether it is accrual outside India, so received outside India, the entire Indian income and foreign income will be taxable in the hands of resident and ordinary resident. When it comes to the resident but not ordinary resident, entire Indian income will be taxable in the hands of resident and not ordinary resident. And foreign income also, in one case, it is a taxable in the hands of resident but not ordinary resident, which is that income earned and received outside India, but the business or profession that the controlling power is in India, then it is called as a foreign income. Only in this case, resident and ordinary resident is liable to pay tax on such income. When it comes to the non-resident, only foreign income only Indian income will be taxable in the hands of non-resident. Foreign income will not be taxable in the hands of non-resident. So for non-resident, so what and all income will be taxed to the non-resident Indian? So the income is a deemed to be accrued or arise in India. Actual that income is accrued or arising outside India, but as per Income Tax Act, even though if it is accrual or arise outside India, we are deeming that that income is accrued or arise in India as per Income Tax Act 1961. Few example I will tell you what and all those. Capital gain on transfer of property situated in India. So capital gain on transfer of property situated in India. The property is situated in India. On that, if you receive any capital gain, that accrual is normally it's accrual outside India to the non-resident. But as per income tax, that income is deemed to be accrual in India. Based on this, taxation will be levied to NRI. Income from business connection in India. If NRI having a business connection in India, and the business is getting any income, so that income will be taxed in India. It will be fall under the deemed to be accrue or arise in India. Income from salary in respect of services rendered in India. For this, there is an exemption also. Income from salary in respect of services rendered in India. If any employee comes to in India for the purpose of employment, and there is no business connection in India for that foreign company, and he is getting any salary in India, for him it will not fall under the Indian income. It will fall under only foreign income only. Salary received by an Indian national from government. If any Indian government paying salary to our employees who are staying outside India, that income will be taxed as in that in for them income will be deemed to accrue or arise outside India, but we are deeming that that income will be taxed in India. Next, dividend paid by Indian company. If any dividend paid by the Indian company to the non-resident, that non-resident income will be accrued arise outside India, but as per this definition, that income will be deemed to be accrued or arise in India. Interest paid by a resident or government or non-resident paid to the non-resident, that income is accrued to the non-resident outside India, but as per this definition, it will fall under the Income Tax Act. So it will be deemed to be accrued arise in India, either interest, royalty, fee for technical services. I will give you one example. If any services received by the Indian company from foreign employees, so either it may be software services or fee for technical services, so they are rendering service from outside India and they are getting income there itself. So for them, income is accrual outside India and they will receive outside India only. But as per Income Tax Act, that income will be deemed to be accrued and arise in India. Because of that only, we are deducting tax, TDS things and all. Because that income is accrued, deemed to be accrued in India. And there is a difference between the NRE and the NRO accounts also. So NRE account is, so few incomes are exempted for NRE, few incomes are exempted from NRI. So what are those? A non-resident external NRE account and NRO, two types of accounts are there. NRE account and NRO account. NRE account is a non-resident external account. So basically, these are they non-resident. He will bring the foreign currencies and he will kept in the NRE account. This one they will convert into the Indian rupees and they utilize for Indian rupees also. In NRO account, so normally he will open in India. So 1 second. Each case.
See the question answers.
So there are two types of account for non-resident, NRE account and NRO account. NRO account, it is a consist of an ordinary account. NRE account, it consists non-resident external account, non-resident ordinary account. In non-resident ordinary account, in the in this it's a they will use for this is the ordinary purpose. In this they will bring this rental income, pension income. So normal regular type of income it will comes to the NRO account. If any interest earned on NRO account, it will be taxable and this income will be chargeable to tax as per Income Tax Act. If any interest earned on non-resident external account, this interest will be exempt from the taxation purpose. So here you can see the examples of the non-resident external account can be used for the bank account to transfer foreign earnings to India in Indian rupees. An NRO account can be used as a savings account to manage income earned in India by the NRI in Indian rupees. This can be included for ordinary NRO account can be used for pension income, rental income, dividend income, etc. Repatriability. So all deposits are made in the NRE non-resident external account. We can easily repatriate to the other country without any limitation and task. Questions? Huh? Questions? Okay. So all deposits made to the non-resident external account, including interest earned, are fully repatriable. And on NRE account, it's a fully exempted also. On NRO account, have been repatriation limits. On NRO account, there is a limits applicable. All deposits in NRE account free from the income taxation purpose. And tax also in NRO account, respective tax will be deducted. So those and all we need to report in the NITR. What are the exempted income of the non-resident? So for non-resident, these incomes are the exempted as per Income Tax Act 1961. So what are those? Interest on non-resident external account from any bank in India. From any bank in India, if he receive any interest on NRE account, such interest will be exempted for the income taxation purpose. So who are the eligible persons? Only individual. So what are the conditions? Is there any condition to claim the exempt income? Yes, there are the conditions. he is as a residential, if he is a non-resident as per FEMA Act, and such account, NRI account should be permitted by the Reserve Bank of India. In the second case, remuneration received by the officials of embassies, etc. of the foreign company. If any remuneration received by the officials of the embassies, they will stay in India. They will work for foreign country. For them, income is accrued or arise in India. For them, they will give an exemption provided who are the eligible persons, individual and not the Indian citizen. If any individual work for the foreign country, if any remuneration received by him, such income will be exempted. There is a condition. So same way, our Indian government people, our remuneration received by our government officials also resident in such foreign country shall be exempt. In the same way, our people will be also stay outside India and they will work with us, our country. In such case, that other country also give the exemption to our employees. Then only this exemption will be applicable. Salary received by the employee of the foreign enterprises. Services rendered India. If any employee comes to India and he is providing services in India, salary he is getting the salary from foreign country. Then also exemption will be applicable. So who can claim this exemption? Individual, not the Indian citizens. Foreign enterprise is not engaged in any business in India. That foreign enterprises should not be engaged in any business in India. And aggregate of the state in, if any outside employee comes to in India and he is getting and he provided the service in India and he received the salary from outside India. For him, income is accrued and arised in India. Even though if it is income is accrued or arise in India, it will not become a taxable, provided there are the two conditions. That foreign entity should not have any place of business in India, first condition. And the second condition is that he comes to India, he should not exceed the 90 days in previous year. Next one, salary received by an individual for service rendered in the foreign ship. Any salary received by the individual for services rendered in the foreign ship, then also this exemption will be applicable. So who is the eligible person? Individual, not an Indian citizen. The aggregate stay, the same condition will be applicable. The aggregate stay of that employees should not exceed 90 days in the year. Interest payable by the unit, if any interest payable by the unit located in the IFSC on the money borrowed by it, then this interest will not be taxed in India. It is exempted, provided that interest should be paid by the IFSC unit. There is no condition to claim that exemption. And now next comes to the double taxation avoidance and agreement. So what is a double taxation avoidance and agreement? It is an agreement between the what is an agreement? It is an agreement between the more than one country. It is an agreement between the more than one country. That agreement, they clearly specified what and all income will be taxed, what and all will not be taxed, what and all rates will be applicable. Those things and all they will specify in the double taxation avoidance and agreement. For few countries, India has not entered any agreement with other country. Then also, if you have a double taxation avoidance agreement, that individual person can claim the double taxation relief. If they have an agreement between the two countries, he can claim the relief. He can claim the bilateral relief. If there is no agreement between the other country, then he can claim the unilateral relief. Bilateral relief and unilateral relief and all, I will explain you later. So what are the documents required to be provided for claiming the foreign tax credit? So we need to file the forms number 67A. We need to file form number 67A on or before the due date of filing of return. Then only we can claim the foreign tax credit in India. And we need the certificate or the statement indicating the nature of income and amount of tax paid by the taxpayer. So what are the benefits if double taxation avoidance agreement it is there? So these are the benefits: avoidance of the double taxation agreement, and the same income, two countries cannot levy the tax. Promotion of cross-border investment. If there is a double taxation avoidance agreement benefit exists, then easily other countries also come to India and they will invest in India for Indian economy development. Facilitation of trade. Easily to set up a business in India and they no need to pay tax in double time in double countries. Avoidance of the double taxation on capital gain also. What are the documents required to claim DTAA in India? So if you want to claim double taxation benefit in India, we should have the following documents: tax residence certificate and a self-declaration, Form 10F, income and tax documents, and additional supporting documents. These and all documents we should have to claim the benefit of double taxation avoidance and agreement. And next comes to the what is the form 15CB and 15CA and it is applicability. Actually, whenever we are making the payment to the non-resident, we need to generate the form 15CA. So we need to form 15CA contains the 4 parts: part A, part B, part C, part D. Whenever we are making payment to the non-resident, we need to give a self-declaration in form 15CA to the banker before releasing the payment. Form 15CB, it is a certificate issued by the chartered accountant. In that certificate, they will clearly mention so applicable TDS rate, whether tax has been paid, whether just 1 minute. Maybe the scheme is disconnecting. Okay. Yes, Vijayam incoming is incoming.
Avakash, you can start presenting. Below there is a, in that next to screen share, below there is a PPT, right? After the book symbol. Click on that.
Yeah.
No, go to screen share, go to that normal screen. Go to the normal screen. Yeah. No. Normal screen. We go to, yeah.
Ma'am, actually, since you joined as a co-organizer, we couldn't do it from our side actually.
Huh?
Since you joined as a co-organizer, our PPT, actually your video is coming basically.
No. No. You go to the PPT. Go to the. You please share the screen. Share the screen. Go to that screen. Don't
Okay.
present this. Go to the screen. Yeah.
Okay.
Below. No. Don't see here. Go there only.
Okay.
Go back to the screen, please. There. Before Zoom, that increase. No. Don't see here. Don't come back again. Be there only.
PPT.
Yeah. Go to the PPT only.
Okay.
Go to the PPT. Go to the PPT. There is a third button right below. Yeah, there you present. Done. Done. Please continue. Sorry for interrupting.
What is Form 15CB and 15CA and when it is applicable? If you are making any payment to the non-resident, so we need to give the Form 15CA. It is a self-declaration issued by the taxpayer to the bank before releasing the payment. Form 15CB, it is a certificate issued by the chartered accountant who is in practice. He will issue the Form 15CB. In that certificate, he will mention the nature of remittance, rate of TDS applicability on the transaction, whether TDS has been properly deducted and paid to the government. The chartered accountant will check and certify and issue the Form 15CB certificate. So in Form 15CA, there are consisting of 4 parts: Part A, Part B, Part C, Part D. In Part A, so only Form 15CB, 15CA will comes only in Part C section only. In Part A, the taxable remittance is up to 5 lakhs. Then we will issue. Then taxpayer will submit the Form 15CA Part A. If in Part B there is a taxable remittances is more than 5 lakhs and they have obtained the certificate from the assessing officer under section 195 subsection 2 and 195 subsection 3, then the taxpayer will submit Form 15CA Part B. If the taxable remittance is above 5 lakhs, then they need to obtain the certificate from the chartered accountant in the Form 15CB. In Part B, there are some exemptions in that if the nature of remittances fall under this type of category, then taxpayer will submit Form 15CA Part D to the banker for releasing the NRI payment. And what all deductions can NRI claim in his ITA? So payment towards the life insurance. If any LIC payment made, if any LIC payment paid by NRI, so such deduction NRI can claim in his ITR. The tuition fee paid for kids, this deduction also NRI can claim at the time of filing ITR. Unit linked insurance, any unit linked insurance plan he subscribed, that one also he can claim as a deduction. And any house loan taken on this principal amount also he can claim the deduction. Investment in equity linked scheme, if any investment in ELLS scheme, then the deduction also he can claim. Also some allowed deduction also under, he can claim some other deduction also under section 54, section 54 EC, provided there are some conditions exist. And you can ask if you have any queries and give an example of each case. Hello, is it audible?
We are allowing you to talk. We are allowing you to talk. We are allowing you to talk.
Say, actually, we are allowed to talk. If you have any queries, you can ask now about this NRI taxation, what we discussed now. Satya Bharat.
Yes. Tell Satya.
Yeah, tell me Satya Bharat Bihari.
Talk louder, man.
Hello, is it audible, Satya Bihari? Yeah, you can ask.
Yes, sir, you said the tax income in NRI account. If there is any deposit to the NRI account from a normal saving ordinary account, there will be again a tax applicable?
You are transferring fund from NRE account to NRO account.
No. From your normal ordinary saving account to NRO account.
Okay, NRO account to normal NRE account.
No. From a, like my father having a normal saving account and he is transferring to my NRO account, who not in NRE, NRO account. So in that case,
Okay.
it will be a tax applicable.
So your father is transferring funds from your father account to your account, NRO account.
NRO account, yes.
So there is a restrictions is applicable.
Yes.
So we need to mention what is the purpose. So you are taking the money from your father, right?
Yeah, father or relative. That's it. I think in father case there will be a gift option, but in a relative case, I don't know what is that one.
In relative case also, if it is exceeding 50,000, then that will be as an income.
Okay.
It will be considered as a income only. It will be taxed as per Income Tax Act.
So who has to pay tax? Well, I have to pay tax.
Receiver has to pay the tax because he is getting the income.
Yeah. So I have to file at the ITR returns, or I have to do it immediately?
Yeah, you need to declare those income. If it is exceeding 50,000 only, then we need to declare that income under income tax return and we need to pay the respective taxes.
So what will be the tax bracket in that case?
Tax respective slabs will be applicable.
Okay, sir. Okay, sir.
And anyone? Vinod, yeah, you can ask him. Vinod. Vinod, is it audible? No? If you have any queries, you can reach us. Vinod? If you have any question, you can ask in the chat bar also. I will give the reply. That's all.
Hello. Mr. Vinod, am I audible? You have raised your hands. Do you have any questions? Mr. Vinod, you are now allowed to talk. Do you have any questions? Okay, guys, then we come to the end of the session. Thank you everyone for this, for all the attendees for come here. Extend my heartfelt thanks, participants, speakers. Special thanks to C.S. Shraddha and C.H. Chaitanya for this wonderful session and insights. And this session will be also in our YouTube channel, and we'll be also sending link. Wish you all success and prosperity, and thank you for joining this session. Okay, guys. Yeah. Thank you for joining. Yes, yes. Someone? Can you please
Hello.
raise the hand and ask the question?
Speaker phone mute. It is also not working. Yeah, are you able to hear me now? Can you hear me now?
Yeah, yes, sir. One second. I'll just pass on
Okay.
the mic to.
Okay.
Yeah.
Can you just repeat the definition of that resident versus the resident
Hello.
but not ordinary resident?
Hello. Yes, sir. Tell me, sir.
Can you just, what is the key difference between the resident but not ordinary resident?
Resident and resident, ordinary resident, but not ordinary resident.
Correct.
Actually, there is if you satisfy any one basic condition, he will fall the residential category. Resident, not ordinary resident, there is some additional conditions also is there. We need to satisfy those both additional conditions. Then only he will fall under the resident and ordinary resident. So, for example, if you stayed in India, these are the additional conditions. If you stayed in India, you are the resident 2 years out of 10 years preceding to the previous year. You have to satisfy the residential category. And the second condition is you must stay in India at least 730 days or more during the 7 preceding to the previous year. If you satisfy both conditions, then you will call it as a resident and ordinary resident. If you does not satisfy any additional condition, then we will call it as a resident but not ordinary resident.
Okay. So you said 730 days, which is 2 years in the past 7 years.
Out of 7 years preceding to the previous year.
So 7 years, if you have stayed 2 years total in a period of 7 years, total 730 days. If it is more, then what happens? Then you are considered a resident only.
We need to at least 730 days he has to stay in India preceding to the 7 previous year. At least 730. If you stay more also.
So if it is more, then you are considered a not
resident.
Ordinary resident.
If you stayed in India more than 730 days, and the first condition, then we will call it as a resident. If you does not satisfy any condition, then you are the resident but not ordinary resident.
My simple question is, I have stayed for more than 730 days in India in the last 7 years. What is my status? Simple question.
So one more question is there, and you need to satisfy 2 years of a residential status out of 10 previous years.
That is also there.
So then you are the resident and ordinary resident.
Sorry, the definition is, am I a resident or am I a non-ordinary resident?
Resident.
Only resident. Okay.
Only resident.
Okay. Now, what are the laws related to rental income on properties? Suppose I receive a monthly 50,000 rupees as a rental income, and I am my status is resident now, or say my status is non-resident. Then what is the law applicable as far as the TDS and tenant responsibility?
So respect to TDS only is applicable, sir. You will get the basic exemption limit up to 250,000 as per. So for resident, entire Indian income and foreign income will be taxable, and tax rates also will applicable same as resident.
Okay, so let me repeat that question again. For a non-resident, for a non-resident,
Hmm.
if he's earning 50,000 rupees a month rental income,
Hmm.
okay,
Hmm.
in India,
Hmm.
what is there? Does he is that what is the tax loss related to that for a non-resident?
60,000, it will be taxable under the income from the head income from house property. 6 lakhs, 50,000 into 12, 6 lakhs it will come now, sir.
Got it. Now, so the tenant is saying he needs to deduct TDS every month. Is that a valid thing by the tenant, or can he doesn't need to deduct a TDS because he'll have to file also the TDS filing and all, right? The tenant.
If he
Okay.
is paying rent,
I am the landlord.
yeah, if a tenant is paying rent 50,000 or more, then for him TDS section will be applicable under section 194M.
Okay.
So he needs
For
to
a
deduct the
non-resident, if
TDS.
it is less than 50, then it is not applicable.
Applicable.
Not applicable if it is less than 50 per month.
Yes, sir. Not applicable.
Are you sure? Because I thought I had heard no matter what the rental income is, whether it's even 30,000 rupees, the tenant should deduct TDS.
The TDS is not applicable. If your rent payment is more than 50,000 only, TDS will be applicable. But when
Okay,
it comes
got
to the NRI present, 15 CB, 15 CA is there, sir.
That is
15
later.
CB
For
last.
15 CACB is okay. Tell me what is that?
How you will receive the amount, sir, to NRO account or NRI
In the NRO
account?
account. NRO account.
So TDS will not applicable, sir. If the rent payment is 50,000 and above, then only TDS will be applicable. If it
Okay.
is less than amount, directly you can receive the gross amount.
Okay. So just receive the gross amount. No, this thing is applicable.
Correct.
Okay. Okay. Got it. And if you do a capital gain on a property for a non-resident, and if he has already satisfied the tax condition, the TDS and all of that, the same capital gain, does he need to show? Does he show in the US filing also, and then he can claim that double taxation is not needed? You understood my question? As a
You are the
non-resident, I
resident
have
in
sold a
India.
property. No.
Yeah,
I
you
have
are
sold a
resident in
I'm a non-resident. No,
Okay.
non-resident. I'm a non-resident. I've sold a property in India.
Hmm.
I've received and I paid the TDS based on the lower TDS certificate and all of that, about 4 or 5%.
Hmm.
Okay. And what happens? So when I'm filing my US taxes, do I need to show the capital gain?
That is as per US law, sir, because India is following as per source of income basis. Residential basis, Indian income tax levying the taxes. But US and all, they are levying taxes on sources basis.
Oh, so
If
what do you
they
mean by
levy
sources basis?
Yeah, if they levy tax on sources basis also in US country, you can claim this tax. You need to declare
Okay.
the capital gain and US tax return also. You can claim the relief.
Okay, got it. Okay, we'll get an opportunity to connect via email separately, right? Because I've got other questions, but I don't want to hold up everybody.
Sir.
Okay, let's connect via email.
Okay, sure.
Thank you.
Thank you.
Thank you, guys. Thank you. So we have come to the end of session. Thank you everyone for joining here. Chaitanya. If you have still any more questions, we are welcome for some more time. Yeah. I have. You can. So I have mentioned our email ID in our Q&A chat box. So you can reach out there if you have any questions, and we'll be very happy to answer that. Okay. Thank you, people. Thank you. Thank you, each and everyone. And have a nice day, everyone. Thank you. I'm closing this webinar.